Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the, what is today? The wonderful Wednesday. It is the May 13th edition of today's Trader's Edge Show. Boy, hard to keep our days straight out there. But look, I'm absolutely grateful for your presence here, folks. But more important than that, during this next 60 minutes, I'm here to serve you. So we've got these markets trading to the downside. We're going to get really right into it. Take a look at the levels at which we should be watching today. So let's go ahead. Let's just simply get right to it. Right now, we've got the Dow trading down 561 points. She's trading down at 23,203. S&P. So all the indices are in the red. Spot volatility is up about 10% right now, 9.78%. It's up $3, 36.28, making its way up to the 50-day exponential moving average. We'll take a look at that and again discuss why that is so important. You've got gold up $8, silver's down 7 pennies, light sweet crude is off 52 cents, natural gas is down 8 cents. Treasury down, the 30-year is up almost 1 full point, 29.30. She's trading at 180.23. Dollar-wise, leading the charge to the upside, it's BlackRock up $21. Equinix is up 11. Regenerate Pharmaceuticals up 9. Cinex Corp up 8. NetEase is up 6. To the downside, Booking Holdings off $45, over 3%. Google $35, 3% as well. Chipotle $34, nearly 4%. Tesla off 31, 4%. So there's certainly plenty to look at. Of course, I want to look at what you want to look at. The first request came in from, Duffy, and Duff was asking what Stevie's red line was on the Russell 2000 at number 1257.90. We'll probably take a look at that during the show. But I gave him that information. Just pass that on along to you. The second question coming from Peter wants to take a look at the ES Mini. So let's go take a look at it. Here what we can see on we're going to start with the short-term time frame. And so this has formed a TD9 count and a Rhodes Momentum Indicator bottom. Now, it did it with a little piercing candle. Will that hold or not? It should hold. Well, let's go take a look at it. Wait. Before I say it should hold, now this is a 30-minute time frame chart that we're looking at. And what I wanted to do is go take a look at the market breadth for the 30-minute time frame. And that may have changed within the past few minutes. I don't know. But let me pull that over, and we'll go both take a look at it, or I'll take a look at it. And so, yeah, just currently, really within the last minute or so, 105, it's 109 within the last few minutes. And what we're looking at here is our Taz market profiles for the S&P 500 for their 30-minute time frame. What we're trying to understand is the market breadth here for this time frame, which just switched to negative. 171 instruments trading below the bottom of the profile and 111 above the top. It's been chopping around here for the last 15 or 20 minutes. If this was market breadth positive, meaning the greenish, bluish line were above the red line out there, then we would say odds favor that Rhodes Momentum Indicator bottom and that TD9 count bottom would hold. We're not there, so it says that those lows are going to be tested, perhaps, or price will move down towards that area. But that's what we see when we take a look at a 30-minute time frame, Peter, for it. Let's take a look at the 60-minute. Now, this has got a slight delay on it. My apology for that. Nothing that I can do at this stage. Price was pushing lower, doing less relative energy here as well, but no bullish reversal candle. So this does not have a confirmed type of a bottom out here. Okay, we're just going to go through one by one the different time frames. And as we get over to the daily time frame, we'll take a look at the real key level of support for it. On a 120-minute time frame, price also pushing lower, doing less relative energy, but not until a bullish reversal candle forms will this generate any kind of bottom-worthy signal, bottom-worthy to at least see some type of bounce out there. We don't have that, but we do have the first three time frames that we looked at. They're pushing lower at this stage with less relative energy, so you must beware especially for an intraday trader and wanting to watch those short-term time frame signals, I'd say the 30-minute time frame is one of the things that we'll be watching during the show here. We'll switch back if I happen to see a bullish crossover on the 30-minute time frame. Right now, that's not the current condition. We switch over to the 5-hour time frame. Yeah, I went from 2-hour to the 5-hour. Now, in the 5-hour time frame, we don't have any kind of a bottom signal pattern or anything, and this is suggesting that price would pull back to the 27.68 area. So write that down on your pad of paper. Let's go take a look at the daily time frame chart here for the ES Mini. When we take a look at it, what we're going to find out is that this generated a Gartley sell signal. It did it over a week ago, and since then the market has been trading sideways. But what the market hasn't done, it hasn't closed below the bottom of a profile. Now this profile here shows 27.66, and that's really the key level. That price must close below inside the ES Mini in order to suggest that there's a change in trend. Now that change in trend signal would take price down to 24.84. That is where the ES Mini broke out. We don't know whether that level will hold. We don't have to worry about that level just yet. You want to be aware of that level, and that level will become more important if the ES Mini closes below 27.66, and it can do that for two consecutive bars. 27.68 was the breakout level for the 5-hour time frame chart. So what you know is in that 27.60-ish area, 66, 68, there should be strong support out there, and that is your ES Mini. The only other element here, I would imagine that Peter would want to know about the ES Mini or the S&P 500 is where that spot volatility index is. And so as we go take a look at it, I mentioned it's approaching the 50-day exponential moving average. Just look to the very bottom left-hand panel. That blue line that you see at 38.59 is that 50-day exponential moving average. The high so far today is 37.42. You'll want to watch that 38.59. If there's a close above that, boy, then it will really indicate that there is a change in trend that is underway inside at least the S&P 500. Just to go ahead and round things out here. Well, let me do this. When I say round things out, let me just do this because I mentioned we just focused on the ES Mini. I had mentioned new profiles. I see that Jay is inside the Tiger's Den, and I know that he wants to know, and I know that you want to know, are there any new profiles, Stevie-san? And the answer is going to be why there appears that the answer is yes. Now, what we're going to take a look at out here, if you look at the very left-hand panel of my screen, you'll see that 27.66 for the ES Mini. No new profile there. However, we've got three that are trying to form. I say trying to form because we're using Stevie's advanced Doppler tool out here. And that advanced Doppler tool shows the NQ trying to form a new profile, bearish in structure, with support being 87.14. That's the level the NQ would have to close below for two consecutive sessions to tell us there's a change in trend. The Dow or the YM right next to that, it also has a new profile. Price is below the bottom of that level, 23.460. I won't know until this evening whether this profile is going to take hold or not. It is valid as long as it remains on Stevie's screen out here, and price is below that level. Inside the Russell 2000. Duffy, this one is for you. The bottom of that profile is 1230, well, let me see, what is it? 1232.26. Brand new profile, bullish in structure. So watch to see if there's a close below that today and tomorrow. It's Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 433, S&P 47. Goldilocks up $9 and change. Trade out at 17.16, and we're going to further that conversation with John in Philly. John, thanks for calling. Thanks for holding. How are you doing this afternoon?
Steve, I'm doing great. Yes, indeed. I do want to ask you about June COMEX gold. Since that April 14th high up near 1,800,
yes,
we can all see gold is coiling. I'm wondering if you can share with us anything that you can see that might define some parameters, giving us clues which direction is the next move once this coiling situation completes.
Yeah. So great question. Why don't I do this here? Let's go through a number of different time frame charts for gold and see what kind of messages we have here. So similar to what I did for the ES Mini. So let's start by taking a look at a 30-minute time frame. First, folks, what John is referring to in the coiling program, coiling with regard to gold, if you take a look at really any of my panels down here, you'll see that price is clearly trading between its descending trend line and its rising trend line out there. So a little wedge pattern. And we're getting closer and closer to the end of that, but this still could go on for another week or so out here with just simply a continuing narrow band of prices. But let's look at the 30-minute time frame chart out here. So when gold bottomed at about noon, 11:30 in the morning, back on May the 11th, so a couple of days ago, it generated Rhodes Momentum Indicator bottom pattern. It did it with with a nice hammer candle. You'll see this little black diagonal line that was drawn out here. That's an automated tool that I've developed. Likewise, now we fast forward to this morning, and price was rising, doing less relative energy into 1130, right into the top of its 30-minute profile, and then we saw a little bearish reversal candle, the dark cloud cover. Now, whenever you get a bearish confirmation of a pattern, our eyes immediately get glued to where is support. Can price break through support? Well, in the case of the 30-minute time frame for gold, that level is 1710, and price is not broken below that area. So do we have a short-term top? Yes. Is it signaling to us anything more than a retracement back to support right now? No. Price would have to close below 1710.90 to be specific, and then that would open up the door to 1696. So at this stage here, just more backing and filling, so to speak, a topping pattern, but price not being able to bust through support. Let's go take a look at a 60-minute time frame. The 60-minute time frame, whereas on the 30-minute time frame, it was very easy for us to see that Rhodes momentum indicator top. We don't have that same pattern on the 60. Instead, what we have is a Gartley sell pattern. So it had a nice A to B equals CD, but as we take a look at it, price also has not been able to bust support, John. In this case here, one of its support levels is what I refer to as Stevie's green line, and that is held. So no indication, well, the indications from the short-term time frame chart, valid topping signals, but price being unable to bust through support out here. Let's go take a look at the 2-hour time frame. If we could generate a Gartley sell pattern on the hourly time frame, we should be able to do it on the 2-hour time frame, and voila, we have that. Now, has price broken through any key level of support? The answer is no. In fact, this Gartley sell pattern has not been confirmed. So I'm going to go ahead and take it off the chart here. Why has it not been confirmed? Because what Stevie needs is the cavalry to arrive. We need to see a bearish reversal candle out here, and we don't have that for that 2-hour time frame. In this case, the range for gold is between 1683, its breakout support, and 1733, its breakdown resistance level out here, but no clear breaks. Now we go from the 2-hour time frame to the 5-hour time frame. And as we take a look at the 5-hour time frame chart, what we're going to see is price is trading between support and resistance, the bottom of its profile, 1694. This is a bearish structured profile, so possibly this little rally that we are seeing right now could run into that could be the end of it, because price made it to 1725.20, and that area has been rejected. But if price get above that, there's clear resistance at 1735. But here on this chart, range bound in between, let's call it 1694 and 1735. Now, the daily time frame chart, where we see the wedge pattern on the black background charts here, folks, and you can see it whether we're taking a look at June or we're taking a look at December or whichever month it is that we're looking at for gold. Here, when we pull over my other daily time frame, we're going to see a clear TD9 count topping signal. Price is below Stevie's green line out here. But you can see just simply this sideways-ish type move. And so with regard to the chart patterns out here, John, I don't see any type of real key clue yet. If I look at the weekly time frame, price is trading above Stevie's green line, and that remains to be bullish. So 1700 is the number to be watching there on a weekly basis. If price were to close below that, which we haven't seen for 2, 4, 5, 6, 8 weeks now, 2 months, that would be an indication that gold might break to the downside, but we don't have that indication pattern yet. And if anything,
I'm going to ask you to stop right there and ask if you'd pull back up that weekly chart.
Yep.
And that's interesting, Steve. This week, last week, 2 weeks ago, and 3 weeks ago, each one of those lows came right down and kissed.
Yep. Oscillator and change line.
The oscillator on change line, which is rising.
Yes.
Kind of like that girl ran away from me when I was 15 years old after I kissed her. Okay. So that's very interesting.
Too much information.
What's the value of that weekly oscillator on change line today? 1700. Oh, great. I like that.
Yeah, and it's a really key level here. I mean, because we can see we're in this coiling effect. We can see some short-term topping signals, but no levels of support being broken. And then we come to the larger time frame, such as the weekly. In order for price to move lower in any kind of significant way, instead of this acting as support, it has to act as resistance.
Thanks so much for sharing all that. I'm just we're going to sometime exit this ever-tightening range pattern.
Yes.
I can't help but think here today, the Powell, the head of the Federal Reserve at 9 o'clock, said directly, things are tough, and if they remain tough, the central bank is prepared to inject more relief, and of course the gold futures contract ran right up and topped right as that speech or that presentation started, telling me there's a group of sellers lurking.
Yes,
and they hit it right there. So I guess let us see which way it resolves, either up or down.
Yeah, they're sort of lurking sellers, that is, in all the major currencies right now. Because really, John, the last thing that we would look at, which we have up on our screen right now, because we can draw the same descending trend line, is has gold been able to break out in euros, yen, or pounds? And at this stage of the game, the answer is no.
Oh, I like that. Thanks so much, Steve.
You bet, John. Always good to hear from you. That was John in Philly. Of course, I'd love to hear from you folks as well. 877-927-6648. Dow's off 507, S&P 55. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're back here taking a look at our 30-minute market breadth profile. This is for the S&P 500, and since we talked about it about 15, 20 minutes ago, this has swung back into the bullish lane, meaning that there's now 157 constituents trading above the top of the 30-minute profile and 106 trading below the bottom. And what's important about that is that the bottoming signals that we looked at for the short-term time frame, the 30-minute time frame out here, let's pull this 30-minute chart over again. So we can see two bottoming signals out here. One is the Rhodes Momentum Indicator. The second is the TD9 count. And there's a brand new profile that formed just as 130 kicked in out here. Bullish in structure. The center line is closer to the bottom than the top. So this is telling us with that positive market breadth that we should see the ES Mini make a move up to the top of that profile. That also happens to be Stevie's red line. So in the 28, 23-ish type range, if price is able to get above Stevie's red line, then that would signal that you could see a move all the way back up to the 28.74 level. One step at a time. And that first step is resistance. We know what resistance is. This step should also help us understand, hey, at 131, what is the message of the market right now? The message of the market is you should anticipate some type of bounce. A bounce to where? Well, a bounce up to resistance on the 30-minute time frame, because that was the one that generated the signal for us. So we'll see how that plays out, but that is the current message of the market. We do this over and over again using the exact same set of tools. Doesn't matter whether it's a 30-minute equity future contract, whether it was gold that John and I were looking at, or whether we're taking a look at a daily or weekly time frame chart. Now, each chart for its time frame is going to generate a different message for us. That's really just the way that it is. But when we look at those shorter term time frames, what it does allows me to be able to share with you the patterns that are repeating more often, so that when we see them on the daily time frame, they help, and they just help you to interpret and understand what the current message of the market is. And it's always changing. If we go take a look at, so what should we look at next out here? Let's go look at, so we talked about the spot volatility index. New York Stock Exchange. Let's take a quick peek at this. And as we speak right now, well, I don't know, did I get kicked off the air? As we speak right now, its advanced decline oscillator reading is almost at its oversold reading. Now, the oversold reading level would be minus 150. It's not there. It's at minus 129. Minus 129 is the level that it's at. But nonetheless, the New York Stock Exchange is in the hands of sellers. My apologies if you guys weren't able to hear me inside the den. I apologize for that. Oh well. Let's see. What can we go take a look at next? Let's go look at. Yeah, there's no questions. I don't have any no charts. Oh boy. So Mr. Bill will get those charts maybe inside the den. They get the charts going. Again, that would be helpful. You should be able to at least see them on Tiger TV out here. So I'm sure that they'll get that all corrected. So what do we want to do out here? Let's go take a look at. Let's do this. Let's go take a look at the top weighted instruments inside the NDX 100. I think that's what we'll do, in lieu of any other questions that come in. So let's begin by taking a look at number 6. That's going to be Intel. And, it was going to be Intel, but we've got a caller. Still no sound inside the Tiger's Den. My apology. Well, let's go out to Mark in Fort Collins. Mark, thanks for calling. Thanks for holding. How are you?
Good. How are you?
Good to hear your voice. Sorry for that delay out there. Now, you would like to take a look at the DAX, so that's a beautiful thing.
Yeah.
Tell me what you're doing and how I can help.
I'm not doing anything. I just I recall from earlier this morning in one of your updates, we were looking at whether the DAX was going to hold the OUL, and
Yes.
It looks like it didn't on the close.
It did not.
And that was one of your keys for deciding whether or not to go short. And so that's one of them. And I'm trying to figure out why we haven't yet, and just kind of trying to think about generally the market based on that.
Yeah, so here's the here's the chart of the DAX, and this morning when we were taking a look at this, so here's the thesis. Mark, hopefully it's okay with you. I just simply share with folks that thesis because it will be easier for them to understand. And so that thesis would start from this page right here. So, folks, this chart that we're looking at, even though it's a bunch of different colored lines out here, it represents the Dow, the Shanghai, the Nikkei, and the DAX. Just so we have a fairly decent look at the U.S. markets, Asian markets, China, Japan, and Europe. And typically, our basis is we're really in a one world market. And it's very important for us to understand not just what's going on here in the U.S., but what's going on around the globe as well. And so this chart here just simply shows that how markets will top and or bottom basically around the same period of time. So this morning, in taking a look at what's the message of the markets, well, I can share with you the charts for the Nikkei, the Hang Seng, the Shanghai, and the FTSE. I won't put those up right now because each of those have topping patterns. But what none of those had done had moved down to a key level of support. I do take that back. The Hang Seng also, Mark, now that I take a look at the charts out here, the Hang Seng did also move down towards the oscillator and change line out here. It's just trading in a consolidation level, but it too had not broken a key level of support. So that left us with the DAX. And in the case of the DAX, as we pull this over here, folks, you're going to see that, yes, price now, because of understanding this one world market. So this was this morning, prior to now, but around 7:38, 8:30 in the morning, price had just tested and rejected Stevie's red line. So there was a close below it. Now, Mark, what we like to see for confirmation of a break of support is two closes below this level. So tomorrow, the DAX would actually be the confirmation. And I'll just pull this chart over here, folks, so that you can understand the idea behind one world markets and understanding how they trade out here. Here's a chart as soon as this will expand. Here's a 5-minute time frame chart for the DAX. When the DAX began trading, what the ES Mini was doing and what the NQ was doing. And you will see, a real direct correlation between these instruments out here. And that was the reason that we started there. So what other questions about the DAX, if any, that you might have, Mark? And then we can move on from there.
No, I just was kind of looking. You were looking for different signals from different areas to kind of confirm going short. I mean, I bought the SPXS a few days back, and I'm doing fine on it. And I'm just in anticipation of this kind of being more aggressive, and just curious as to your thought process. That's all.
Yeah, no, absolutely. So really, there's a couple of things. So part of that thought process is the following. We're looking for the next significant major top. And if that's going to take place, we don't have to worry about selling the top tick out here because there should be a very sizable movement to the downside. And inside the Dow and the Russell 2000, that gets down to the March lows and beyond. And if that's going to happen, we're also going to see the spot VIX index trading above its 50-day exponential moving average, 38.59. Hey, Mark, we're just about to go to a break. Go ahead and hold on. We can come back from this and further our conversation. This is Steve Rhodes with TFNN with Mark in Fort Collins. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Mark in Fort Collins. And Mark, did you say you were short the XLF or was it the S&P?
No, I'm short the SPYs with the SPXS, and I'm watching for my trading. I'm watching the swing point from the 4th of May on the SPYs, which is 279.13. We're slamming into that with significantly more volume, but we haven't quite got there yet. And I'm kind of watching that to decide whether I'm going to hold on to, if it's going to hit that with and hold, or if it's going to blow right through it because we got the higher volume. So.
Yeah, so folks, what Mark is looking at is May 4th, as he said, the volume there was 80 million shares, and today we've already done 83 million shares out there. And so even if price, so it's trading into that swing point, whether it gets below the low, which is 279.13 or not, as long as price closes below 283.90, that's going to suggest that price would at least try to go at least tag the bottom of that swing point. And you've got this consolidation. So being short the S&P 500 is absolutely the correct position. That's based upon this little Gartley sell pattern. Not little, but a Gartley sell pattern, folks. So we'll take a look at for the S&P 500 that completed prior to its breakout breakdown resistance level of 29.85 out here. This is the first day where, Mark, we have the S&P trading below Stevie's green line. So So the question is, will it trade below that tomorrow? If you get a second close below that, that's suggesting to you and I the price will pull back to 25.74. But because it's the S&P 500, you and I have the ability to use an additional tool to find out where support is at, and that is that Taz market profile. And as we pull that back up, or I pulled the Taz market profiles here for the ES Mini, we're going to see that 2766 is going to be its key number out here to be paying attention to, because that, in fact, could be support. Now, that level happens to coincide, the bottom of that profile happens to coincide with your May 4th swing point. So the low of May 4th is 2771. The bottom of that profile is 2766. Says 0.80 on my screen, 0.75. So 2766. So price is pulling in there. And if we do get a close below the bottom of that profile, it'll be the first time that we see a close below the bottom of a daily profile. And that would be suggesting that being short the S&P 500 is the correct move as well. Ideally, you'd get two closes below that. Below the bottom of that profile out there to give you that kind of confirmation. Changes in trend, folks, will typically occur when we see price close below, from a profile standpoint, with price closing below the bottom of its daily profile for a couple sessions in a row. And then the other thing would be moving over and take a look at what's the market breadth look like for the daily, weekly, intraday timeframes. Well, as we switch over now and take a look at the S&P 500, we're going to see that for its daily time frame, it is market breadth bearish. Let me get rid of the center line out here. And that crossover took place yesterday at about midnight, looks like, is when that actually took place out here. So this market breadth, you've got 33 instruments on a daily basis that are trading above the top of the box, 241 below. So staying on this side of the trade here is the correct move based on everything it is that we're looking at. What you've got going on, the only thing to get in that way right now is going to be the bottom of that profile, which you or I don't know if it will get taken out. And then, ideally, if this is a change in trend, we would also see a weekly time frame chart for the S&P move to market breadth bearish. And right now, we've got kissing cousins, literally. There's 90 instruments, Mark, inside the S&P where prices trade above the top of the weekly profile, and 89 instruments that are trading below the bottom. So you're going to have the larger piece of information, it looks like, over the course of the next day or so out there. But what additional information can I provide you to assist you with your trade?
That's kind of it. I mean, I just kind of looking more general. I mean, I could get into exact stops and all that stuff, but I'm in the SPX XS at 10.05, and it's trading about $1 over that right now. So I'm just watching that level on the 4th to see how we finish up. So.
Yeah, so SPXS. So the only pieces of information, the average true range on that is 86 cents. So I just thought I would throw that out to you so that you've got that. And that way for any stops, you can kind of throw that into your consideration out here. The only real things that have not yet confirmed the overall bearish move would be that spot volatility index at this stage here for you, and the mere fact that price has not broken through the support level from its daily profile. So what you're looking at, or what I'm looking at, what I think we are looking at from a larger perspective, because the anticipation is a larger move to the downside, is the confirmation of those last final pieces of the puzzle out here. Because look, when the spot volatility index is below that 50-day exponential moving average, and is best visually shared, folks, by taking a look at this chart here, and this chart's got the S&P 500 up top, spot volatility index down below, and the yellow areas show you the spot volatility index when it is above its 50-day exponential moving average. And generally speaking, the S&P will move sideways to lower. The green boxes or rectangles are when the spot volatility index is below the 50-day exponential moving average. And there the message is that price is going to move sideways to higher out here. So that's really, for me, Mark, that would be the last piece of this puzzle, is getting that spot volatility index to trade above that 50-day level, currently priced at 38.59.
Okay, so it looks like the last piece of the puzzle, because everything else is kind of confirmed to sell, and we were almost down 100 S&P points from the top. So it's quite interesting.
Yeah, the real last piece of that puzzle was really coming from the NDX 100, right? Because that was continuing to move the markets higher. We know that when markets top, they don't all indices don't top at the same time. For example, on this counter trend rally at this stage, we know that the Dow topped on April 29th, the S&P topped on April 29th, the Russell 2000 on April 29th. And now it's the NDX that topped yesterday. Now, the reason why I say topped, folks, is because of patterns. And so in the case of the NDX 100, it had really two topping signals. One was wave number 7. That now appears to be confirmed because we have a lower high. And the second was the 3 drive to a top pattern. And in order for that to be confirmed, it needed the bearish engulfing candle. Well, we got that yesterday. And as long as price closes below Stevie's green line at 90.65, that's the current price out there, then the last piece of the indice puzzle is now in place out there.
All right. I'll keep reading your newsletter and see what you're doing and see how it plays with what I'm doing. And I appreciate your advice. And this few-month run with your newsletter has been interesting, so I'm learning a lot. Appreciate it.
Great. Well, thanks so much, Mark. Great to hear from you, and we'll look forward to speaking to you again. Folks, the Dow's down 500, S&P 54. We'll be right back.
Markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets. This is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we got 4 questions. Let's see if we can get through these here during this next 2 minutes. The first one was to take a look at the Russell 2000. So as we take a look at the Russell 2000, here's what we know. We know that this completed a 3 drive to a top pattern. Today is the first day. It appears that price may close below Stevie's red line. That number's at 1258. So, Mike, I'd be watching 1258 coming into the close. A close below this today suggests that price wants to pull back at least to the bottom of the 3 drive pattern in the 1020-ish type area out there. A second closing below Stevie's red line tomorrow will give you that confirmation. However, before you go that far, what you're also looking for is where does price close today in relationship to its new market profile on the equity future contract. Assuming that this stays in play, now this is a bullish structured profile, so you're going to want to really be watching 1232. If price closes above 1232, support will have held. And if you can't bust them down, it's a bullish structured profile. This would suggest an upcoming bounce, maybe back up to Stevie's red line when you take a look at the Russell 2000. So I hope that helps you out with regard to the IWM. We've got a request. The question is, how strong or weak is the XLF compared to other sectors? So I don't have the time to go take a look at it compared to other sectors, but with regard to the XLF, we can see that it too formed a Gartley sell pattern. And now today it's trading below Stevie's red line, which is 21.23, and this is suggesting that price will want to go ahead and move back to the March lows. So hopefully that helps you out with regard to the XLF. Hector wanted to take a look at Apple out here. So let me switch over. We'll go take a look at Apple. And then the last question was about Uber. With regard to Apple, the signal that it generated for us yesterday, in essence, was a sell the D point. To say that this is a Gartley sell is probably pretty difficult to do because we're already back to its highs out here. But you did get a sell the D point with a dark cloud cover candle. In order for price to move lower, price will need to close below Stevie's green line. That's at 302.13. So you do have a topping signal, but price has not broken any key levels of support just yet. And that is in Apple. We didn't get back to Uber, but I can say in the case of Uber out here, I don't see any kind of a topping signal. The price just trading between support and resistance, 33.66 and 30.52. Whew, we got it done. Folks, stay tuned. 2 more great hours left. Have a wonderful Wednesday. I'll see you on Terrific Thursday.